You're in the Business Insurance Zone with me, Steve Savant, national financial columnist and money color commentator. This week on The Biz, our premium financing series, and on today, the potential marketplace for premium financing with attorney Rick Veit, and in the second segment, Todd Hammer, all here on The Zone.
When it comes to life insurance, annuities, long-term care, disability, or group pension plans, we're the news you can use.
Well, welcome everyone to the Business Insurance Zone. I'm your host, Steve Savant, and we're broadcasting live to a nationwide audience of financial planners right here in Fountain Hills, Arizona, home of America's largest fountain. And with me today, day 4, talking about premium financing, is attorney Rick Veit. Rick, thank you for coming to the show.
Hi, Steve.
You were on a couple days ago, or yesterday, I guess. And I'm thinking, when I have an attorney on the show and I'm talking about marketing, that does not work for me.
Right.
You know what I'm saying? I usually think of attorney and marketing. But really, you have a handle and a demographic on who are targeting for premium financing. I noticed one of the stats that you gave me here, and I found this to be astonishing. I couldn't believe it. 950,000 Americans are worth an excess of $20 million.
That's absolutely correct, and it's fairly common knowledge in the financial industry. Probably not so much in the legal industry, but certainly accounting and financial, and it's easily verifiable.
Well, when I look at a number like that, I don't know how I can approach. If I have a marketplace that's sizable, how do I, as a producer, as an advisor, how do I ferret that out? Where do I go to see that kind of affluence?
There are several ways to approach these people, but primarily they take their direction from their advisors. You somehow have to try to develop a relationship with their attorneys or accountants. There's lots of ways to do that. We can probably discuss that in the future. But the door in is through their lawyers and accountants, their advisors.
Now, have you found them warm to this idea of increasing their clients' debt? Because I'm pretty sure that's their first thought.
It is. You have to explain the program, and one of the policies that Bruce and I have is we really only start the process involving the advisors. If we sell the client and we're weeks or months down the road and all of a sudden they bring their lawyer in then, and there are a couple of problems with that. First of all, the lawyer might feel left out, so they might feel a little defensive and, who are these people? What are they telling my client to do or not do? So we bring them in from day one and make them comfortable with the concept. And the fact of the matter is 95% or more of the loan is already sitting there in the cash account of the policy. So the client's portion of their responsibility is much smaller than the loan itself.
When you talk about high probability, that phrase, high probability, you have 13 years of actual data. We're not talking about possible modeling, potential software that will show it. We're talking about actual cases that have went through even 2008.
Absolutely.
The trauma of 2008. Talk a little bit about the high probability, because that, I think, really brings maybe everybody's demark. They kind of like gun down their DEFCON levels of dissension. Now the attorney's hearing you speak this about how you're 5%, maybe 7%, really short the very first year, and the collateralization will pick up that difference. But really, when you think about high probability of making this work, you really have already done this.
Yeah, it's been in process for well over a decade, well over 1,000 individual policies, as Bruce has said earlier. Many of them are recognizable American family names from some of the largest companies in the country. And attorneys oftentimes like to talk to other attorneys whose clients have done this. Of course, we often provide those references. We encourage some of these lawyers to actually speak to our bank reps. The bank's due diligence process is so strict and so detail-oriented. They don't want to loan tens of millions of dollars in some instances to a program with, some potential to fall apart. So some of our best program references are actually our bankers, and we'll put them right on the phone with the advisors and attorneys.
I'm amazed. If we have about almost 1 million people that are at least 20 million and above in excess of wealth, I'm thinking about maybe the next step down of hundreds of thousands of businesses.
Yes.
I mean, that's even a bigger demographic that could actually benefit from premium financing.
Yeah, that market, we think, is 6 to 8 times larger, if not more, with the potential to use this product, but on a smaller scale. And we definitely have the ability to offer that now. That's something that was rolled out within the past 6 months. But let me just mention that of those almost 1 million families, 95% of them have no insurance or are severely underinsured. Many times they got a small amount of insurance before they made their wealth. So that market is just absolutely huge, and we've only touched less than 1% of it.
I'm telling you, every time I hear that, I just cannot fathom that wealthy and affluent Americans that are worth 20 million or more have little to no life insurance at all. It just doesn't make any sense. No fiduciary, no attorney, no CPA, their advisors, nobody brought this to them?
Well, you would think in spite of their wealth that they've got access to all the advisors they need at very high levels, and they do. But attorneys as a breed of advisors, we tend to be reactive rather than proactive. Accountants are a little more proactive, but they're focusing on tax, reporting, other issues. And frankly, not a lot of lawyers and accountants really understand this level of life insurance planning. I really knew nothing about life insurance as an attorney. When I became a CFP after my law, I passed the bar and was practicing, that's when I really started to get into the world of life insurance and saw that I've got to know something about this to really offer a comprehensive estate plan to my clients. And most firms really are not that versant in sophisticated uses of life insurance, certainly not financing it.
When I think about the idea that 50% of the affluent Americans in the United States think that life insurance actually is a good investment or a good deal in these plans that we're talking about. So when I think about the use of it, if I have half of those people believing that, but they don't have the insurance, I have to figure out a way to market intelligently through their advisors, it sounds like, to try to get a piece of that pie.
Absolutely.
When we come back from the break, we're going to continue talking about this and talk to a specific agent, Todd Hammer, who actually made this happen in his practice. We'll do all that right after the break.
You're listening to the insurance industry's #1 resource for products, planning ideas, carrier information, and interviews you can use. When it comes to life insurance, annuities, long-term care, disability, or group pension plans, we're the news you can use.
Did you know the average 401k runs out of money just 7 to 8 years into retirement? Time Magazine, the Wall Street Journal, and many other publications have warned of the difficulty of saving with a 401k. But what if there was a way to create tax-free lifetime retirement income with no stock market risk? Good news, there is.
Living in fear of the next market dive is not the way I want to live my life.
Why would I go out there and take on risk when I don't need to?
I have a lot less stress knowing I can't lose any more of my retirement savings in the stock market.
Call now to receive your free, no-obligation analysis of what this retirement vehicle could do for you, a comparison to your current retirement plan, and a free video that explains this exciting opportunity. Start planning a retirement you can enjoy instead of worrying about future tax increases and stock market losses. Creating income that will last your entire life is the most important thing you'll ever do. Take control of your future. Call now for your free analysis, comparison, and video.
Well, welcome back to the Business Insurance Zone. I'm Steve Savant with Todd Hammer. And remember, you can order today's chart toppers at thebiz.tv. Just go out there. I do there all the time. See what there's tons of material out there that we have for you. And there's some carrier exposés that we've done that I think you're going to find fascinating. And just a heads up, before moving forward with any of the ideas that we talk on this show, and especially all this week about premium financing, always consult your tax advisor, and if you're FINRA licensed, your broker-dealer compliance department. I want to make sure we're always touching base with those two authorities in your life and keeping your practice up to snuff. We're talking with Todd Hammer. Todd, thanks for coming onto our show. I mean,
thanks for having me.
You're the real person. Everybody else so far has been fiduciaries, the CFP, the attorney, the people that do. You actually do this, and I say this with because I know Todd won't, that we're talking about Todd's been involved in this and he's going to talk about 3 quick ideas that they've actually placed. He is a $1 million target producer in this genre. So when you think about premium financing, this is lucrative. And honestly, when you first got into this, did you even know this existed? I mean, your first case, it must have been nervous.
Well, I knew about premium financing. In the late 90s, I was dabbling in that area. But the way these things were designed, they were too ambitious in their interest rate projections. And these cases were really looking for someone 80 years old and up with maybe a short life expectancy. And they had to pay interest out of pocket.
Right.
So when I learned about this program, and I met the fellows that you've been interviewing here. This was something I really studied very carefully and very closely, you know, because I had, you know, there are programs out there I've seen and let go, and this one stuck with me. And I said, this is something very different. This is something that where everything is overly conservative in its structure.
True.
Interest rate crediting, rates taken from the World Bank over 15 years, projections, and then just all the wheels involved in this were just very conservative, and I like that. You know, especially with what was going on with the economy
Well,
and everything.
especially your first case. Talk
Yeah.
about your first case, because it's a typical case.
Well, you know, it's funny. There was a fellow who's now about 76 years old, and I knew him when he was about 40. And he ran a business, an advertising business, and he did very well. And he was very adverse to buying life insurance. He was one of those guys that just didn't believe in the product. You know, like people don't die, all right?
Right.
And he didn't spend any money on life insurance his whole life. And as soon as I learned about this program, I gave him a call and I went to see him. And he had an estate somewhere around $30 million. He did no trust work, no life insurance, basically nothing. You know, he lived with his wife, he had grown children who he loved, but he did no planning because he just didn't want to open his checkbook. And I sat down with him and I exposed him to this program, and basically saying this can be designed where you don't have to open up your checkbook. You know, some people do put a little money into this, you know, it all depends, but if you want to, all you have to do is post some collateral.
Now, here's a client that's been, you know, life insurance adverse. This caught his attention.
This definitely caught his attention. No one approached him ever with a scenario like
Wow.
this. So he called his attorney in, his estate attorney and a long lifetime friend, very trusted advisor, who vetted the program very carefully and told him that, listen, you've done no planning. You're in your 70s. He was uninsurable. So he did a policy on his wife, who was just at the top edge of, you know, of being able to get this, age 70. And P.S., they have a $25 million policy inside of an irrevocable trust. They haven't opened up their checkbook, and it's been performing very nicely, you know, averaging what it's supposed to be averaging over the last 4 years. We have a 4-year anniversary coming up. And this is something that, you know, that's going to save $25 million in estate taxes for the benefit of the children.
Have you ever thought that you were going to be into this at this level? I mean,
No.
you also did one of those really new ideas called multi-generational cases. Talk about that, because that's really something.
Yeah, I approached a client of mine who had a very large estate. Okay, we're going to say in excess of $200 million. 95% of that was in real estate. So look at the liquidity issue here, right?
None.
Now this fellow was in his mid-80s, and his wife was in her mid-80s, and they were pretty much uninsurable. You know, what can you do, right? Because they did almost no planning. And I approached them with this program using the multi-gen application, and I sat down with their family office. They have a family office, of course, and I approached them and said, look, if you take a policy out, not on them, but on their children. In this case, it was a 57-year-old daughter who was actually living with them on the estate and taking care of them. She was never married, no children, okay? But if you take a policy out on her, and we were actually looking at numbers up to 100 million, they ended up doing 50 million, okay? And because there was some, you know, the collateral, like I said, almost everything was stuck in real estate. They only had so much cash collateral, which would take care of a $50 million estate. And we designed this whole thing where basically the generation one, the older folks, would guarantee the loan, and this is all, you know, through legal documentation. And we would do instead of taking a 10-year premium pay, which is what we usually do, we heaped it into 1 year, borrow the money, put it into a premium advance account, okay? And if generation 1 and 2 pass away in the next 1 or 2 or 3 years, which is not out of the question, understanding their medical conditions, then a good chunk of that $24 million would be essentially a tax deduction on generation 1's tax return.
When I think about multi-generational cases and the cases that you're doing now, I mean, did you ever dream you were going to hit 7-figure target premiums?
Nothing could help me get to where this is getting me. And I got to tell you something, you need these folks, Bruce and Rick.
Oh yeah.
You need them, you can't do it without them.
Yeah, we're not gonna try to do this. This is turnkey, not turnkey, a sales solution.
Yeah.
This could be huge for your practice and build out your business. If you want to see more on this, just hop out to our website, hit our red on-demand video button right on our homepage at thebiz.tv. Well, that's the Buzz on the Biz for today. Get in the zone, the business insurance zone.
You're listening to the insurance industry's #1 resource for products, planning ideas, carrier information, and interviews you can use. When it comes to life insurance, annuities, long-term care, disability, or group pension plans, we're the news you can use.